Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Mark Willis. Thanks for being on the show, Mark.
Hey, thanks, Whitney. Thanks for having me on.
Yeah, happy to have you back as a repeat guest. And you have so much knowledge in this space and being able to help us with our finances. So I'm looking forward to this conversation and potentially more conversations. But as a listener, if you don't remember Mark, you need to go back and listen to show WS 439. It came out January the 3rd. I would encourage you to go back and listen to our conversation there as well. But a little about Mark. He's a certified financial planner, #1 best-selling author, and the owner of Lake Growth Financial Services, a financial firm in Chicago. Co-hosts the Not Your Average Financial podcast, where he shares some of his strategies for investing in real estate, saving and paying for college without going broke, and creating an income in retirement you can't outlive. So I love that, Mark. Without debt or paying for college. My goodness, it's such an issue at the moment, right?
You bet.
Anyway, thank you again for your time. Give us a little more about maybe who you are just briefly, and listeners can go back to obviously show 439 and listen to you there as well, and we'll dive in.
Yeah. So as you mentioned, I am a certified financial planner, which puts quite a bit of emphasis on just learning the entire financial universe. So breadth and also depth. They make you go through the deepest bowels of the financial tombs and catacombs, and it sometimes can take someone it took me several years to earn that credential. And I kept track of how many financial vehicles, financial products are covered in that designation. And it was over 450, literally 450 different places you can put your money, and explaining what it does, because as a hedge fund is going to be different than a savings account, which is different than a 401k, right? Your money goes places and then it acts different depending on where we keep our cash. And as syndicators and business owners, it matters where you keep your cash to help you not only survive tough times, but also thrive in the good times as well.
Our money acts differently depending on where we keep our cash. I think that's good to think about.
It seems like an obvious statement, but honestly, most people just get that 401k when they get their day job and don't think twice, I'll ask somebody, hey, what do you want your money to do for you? And they'll say things like, well, I want easy access to the money. I want it to grow at a good, decent rate of return. I want some tax advantages, because I believe taxes are going up in the future. And I don't want to be feed to death. Well, the 401k fails all 4 of those tests, and you could keep going, right? So it's important to realize that you have a choice. Now, I'm not telling you folks not to at least get up to the match on their 401k. If you happen to get one of those at work, that's great. But maybe there's a better and bigger place for you to put your cash. And I know a lot of your listeners have figured out that real estate is a fantastic place. And, unfortunately or fortunately or whatever, most certified financial planners don't see the value in anything that they can't charge a fee for. And real estate would be one of those things. So it's the old phrase, if you ask a barber if you should grow out your hair, you can bet what his answer is going to be. So real estate's a great spot to keep your cash. Now, I believe that there are some ways you can complement your real estate or any other business, right? Your syndication business, whatever, to improving your financial life without taking a bunch of unnecessary risk. And that's what I'd love to talk with you about some today.
Yeah, let's dive into that. I know you have some specific strategies that's going to help us with increasing that yield without increasing risk. So let's dive in.
Sure. Well, again, I think, we have to find out what is it we truly want our money to do for us. And I really can't answer that for each person listening here. But it's important to think, especially as business owners who are looking to run syndication projects and businesses, asking yourself, what do I want my money to do for me? If I could design a perfect financial vehicle that would help my business grow and thrive and attract new outside capital, what would I want that financial vehicle to do for me? I'll kind of list my own personal list as a business owner myself. I personally needed liquidity. I needed access to cash. So funds accessible for emergencies, opportunities, becoming more borrowable to banks, financing purchases. I'd want some sort of safety in that asset. I'd want some sort of guarantee that the money was there when I went to go look for it and that it was being audited by outside third parties. I'd want some sort of guarantees on the growth, like decent rates of return, et cetera. I'd want tax-free access to my money and no penalties, no early withdrawal, surrender charges or penalties like 401ks might have. I'd want it to be flexible where I wasn't forced to pack money into it every year, but I could raise or lower what I put in there. Give you a quick example of one thing I'm talking about, like a Roth IRA. It's tax-free when I get the money out, but I got to wait oftentimes years to get the money out, and I am only able to put in, what is it this year as of 2020? If you're under 50 years old, you can only put in $6,000 a year into a Roth IRA. Not exactly something you could run your business on, right?
Right.
Or retire on for that matter. So, and maybe most important to businesses in the real estate space, you'd want it to be creditor protected, meaning you wouldn't want it to be exposed. You wouldn't want that money to be exposed to creditor risk or predator risk, meaning, I was talking to somebody the other day. It's in the tens of millions how many lawsuits are delivered against business owners each year. And it's not a matter of if, but when. And I think it was over a 20-year period, 95% of all real estate investors and businesses in the real estate space will be sued. So it's like, where do you keep your cash so that when that happens, it's not just an open buffet for folks that want to come sue you, take that cash from you.
And so we are still talking about those funds that we want to have available, though, right?
Right.
Okay. So the funds we want to have available for that emergency fund, or that for us to be able to invest when when that amazing investment opportunity comes along, et cetera, things we need cash for on a day-to-day basis. We wanted to think about the tax implications, or, no withdrawal penalties, things like that.
Absolutely.
Right? Okay. Yep. Is there an amazing vehicle that you recommend for that?
Sure. Yeah. Well, I think obviously looking over the 400 plus vehicles that I was studying, it came across my mind as I was reviewing it, where to keep my own money in between my real estate deals that I was looking to get into myself, was whole life insurance designed the bank on yourself way. So what I mean by that, it's a modern form of high early cash value whole life insurance designed with special riders that essentially accelerate how much cash you have day one, month one in the policy. And that gives you a few things that does really well for the syndication business. One, you've got a big bucket of liquid cash that you can use for anything, marketing your syndication projects, investing in deals if you needed to, and more, right? It does do a nice, decent, conservative rate of return that'll beat your money market accounts or other cash equivalents where your money is sitting before you deploy it into real estate. That money is creditor protected in most states. Check with your current state wherever you live or wherever you operate your business. But there's, protections against lawsuits. The gains in the policy are locked in. So every single year you get gains on that policy, it's still yours, and they can't take it away from you next year if the market crashes, since it's not tied to Wall Street or real estate markets. And then maybe most important, it allows us to become our own source of financing. So you can, in essence, become your own banker, Whitney, and use that policy's cash value like a line of credit to yourself, and you control the whole process of that loan. So you borrow from the life insurance policy if you need to for your business, for the real estate, for operating expenses for your fund. And then as you can and want to, you can refund that policy loan to yourself. And all the while, and this is the mind-bending piece to me, Whitney, but when you borrow against this policy, it will continue to grow with dividends as if you had not taken the loan at the same time, right? So that's enough. Maybe I'll pull over for a minute. Any thoughts, questions on that so far?
Well, I want to say, what's the cons?
Right. Yeah. There's no perfect financial instrument. That's just a myth if you're out there looking for it, right? So there are some insurance expenses in the first few years, right? So that's an important piece. It's a nuanced, custom designed financial solution, and the insurance expense is there. So if I put in $100,000 in the first year, I don't know, depending on your age, health, habits, you might have $60,000, $75,000 of cash value in the first year. Even a well-designed modern whole life policy has some expenses. Now, the death benefit, again, depending on your age, might be half a million, $1 million. And that death benefit would be paid to your family or your business even in the first month if you passed away, right? And had to, leave that to your family. That's a great rate of return, but don't go looking for that, right? Let's keep you on this side of heaven for as long as possible, right? So now that is an expense. So that's one of the considerations. I always tell folks, don't do bank on yourself type policies if you're just looking for get rich overnight money, right? Now, what about that? So let's go back to those numbers quickly. If I put 100 grand into a policy and I have, let's say, 70 grand available day one, month one, what can I do with $70,000 to increase my yield without any additional market risk? Okay. So again, bank on yourself is great, but compared to what, right? So let's set aside bank on yourself for a minute. Let's say that you only have 100 grand in your cash bank account for marketing your next syndication deal or whatever. That's a great marketing budget, by the way. But let's say that's all you have. Okay, so we're going to spend 100 grand on some of your funds expenses, and it's gone, right? Once you spend money in a savings account, how much interest are you now earning on the cash that you spent?
Zero,
right? Yeah, you weren't earning much anyway with the bank's interest rates these days, but you can only earn interest on money you didn't spend, meaning the money is only doing one thing at a time. It can't do two things at once if it's in a regular savings account. Again, where you keep your money makes it do different things. All right, so now let's consider this. Let's say you had 100 grand in your whole life policy that you paid into your whole life policy. There was an expense of some insurance expenses, right? So now we have 70 grand, let's say. But now we borrow from that whole life cash value, borrow against it using the cash value as collateral. The policy's cash value is still there. Remember, that's the key word. It's collateralized by your policy loan. So when you borrow against that whole life cash value, the policy continues to grow and give you the same guaranteed cash accumulation and the dividend as if you hadn't touched the money. So our policy is over here cooking, growing, doing its thing, and you've got the 70 grand out there in the world to grow your fund, invest in real estate, bring in more outside capital. Now your money is doing two things at once. And next year, that policy will be not 70 grand, but again, depending on all your particulars, maybe it's, you've added some additional premium, whatever else, and now it's 150 grand that you've paid in, and the policy cash value has grown to that $150,000. Now we're really starting to see some growth and some real ongoing potential for that growth of the policy, and it's become a source of capital for your business at the same time. So it's sort of a long tail. It's a long-term financial vehicle, and that's one of the considerations. Don't do this for get rich overnight kind of wealth accumulation. One other thing, and then I'll hush for a minute, Whitney, is you don't have to be the insured. So if you feel like, hey, I've got some health issues, or I got too many candles on my birthday cake, so to speak, you can be the owner of a policy, for example, on a business partner or your spouse or your children, and you are simply the owner of the cash, you're the owner of the policy, but they might be the insured, the actual human life it's tied to. So that's some considerations there.
So we're growing that policy, and the growth of that. Does it go back into the policy? And maybe you answered that, but I missed it. Does all the growth go back into that, and it's not really acceptable or usable as far as cash flow, or it is?
Yeah, no. So within a month of starting your policy, you have the cash value immediately available for you, whatever that cash value might be, right away. So I've paid money into a policy and then borrowed it out within the month to pay my taxes, for example, if need be, or invest in some real estate. We did that last fall. So you're able to keep that cash flow as a line of credit to yourself, and you control the repayment strategy, the process, the timeline for repaying that loan. It's not like a normal loan where they force you to pay on a certain schedule, where they're controlling that whole process. No, you are in essence your own banker, and you're able to essentially schedule your own repayment plans and make your own schedule according to what your needs are for your business. I've even had folks say, you know what, I'm going to wait a year till we sell the deals in our fund to repay the policy loan.
Okay, so what's the negative of having that, let's say taking that loan out and having the loan out for 5 years?
Yeah. Well, obviously it is a loan, but it's not like the loans we're used to because it's self-collateralized by the death benefit. Here's what I
It's
mean
money
by
you
that.
put in there.
Yeah,
Right?
yeah. Well, and the insurance company knows they're going to be paid back one way or the other. So there is a loan interest rate when you borrow from the policy. Usually it's below what your credit of your policy is, the guaranteed cash accumulation. So there's an arbitrage there, right? So if I, give you a quick example, I had a guy who took a $350,000 policy loan out of his policy. He had the cash in there to do it, bought some real estate, paid the loan back over 5 years. Over that 5-year period, he paid 38 grand in loan interest, which works out to about 2% APR over 5 years. Okay. In the same 5-year period, he got $120,000 of growth with him putting no money into the policy at that point. So he earned 120 grand, Whitney. He paid 38,000 for the privilege, and he had his real estate deal appreciating, the rent checks coming in. I mean, that's some money I'd be willing to spend a little money loan interest on, right?
Right.
That's awesome. Yeah, so like I say, that's arbitrage. But if I never pay off that loan and there are gains in the policy, you can lapse your policy, and there's a tax consequence if there are gains in the policy. I've never seen anybody have that happen to them. It doesn't happen by accident, right? You usually have to really be messing up the policy big time and not, working on it with a competent bank on yourself authorized advisor like me or my team, which we can talk why that's important if you'd like, Whitney. But the key is, watch that loan, use it. But even if you die with the loan outstanding decades from now, your death benefit is just reduced by the loan balance at that point, and your family gets the rest income tax free.
Say that's what's reduced.
Okay, so let's say at that point in the future, you got a $2 million death benefit and 100 grand of loan on the policy when you pass away. Death benefit goes from 2 million to, what would that be, 1.9 million, right. And your family they'll have to struggle along on 1.9 million bucks.
No, that makes complete sense. Yeah, it makes complete sense. So, what else as far as this insurance policy that we're investing in or investing through do we need to know? I mean, because I've never done this before. I'm not even sure what other questions, I should be asking you about it.
Cool. I'll try to keep it. I try to keep it as simple as possible for folks. If you want to really dive deeper, go to our podcast, Not Your Average Financial Podcast, to learn more about this. We have over 100 episodes on the topic, including a bunch on real estate and business owner financing and so forth. But I'll keep it simple. I've got a really nifty, and maybe some people would say dad joke, corny acronym to keep this super simple. TGIF. Okay. So bank on yourself. It grows on a tax deferred basis, and you can get access to the money income tax free if you designed it correctly with a competent advisor. Okay, so that's the T. Tax advantages, meaning you can get the money out anytime you want with no taxes due. Even the gains can be accessed without taxes due under current law.
When do we have to pay taxes?
You put the money in after tax, not like unlike
tax,
yeah, much like a Roth IRA. You put the money in after tax. And you bring up a good point. When do we have? It's not if, right? There is no financial instrument that completely eliminates you from the tax code, except this island out in the Cayman Islands somewhere. I think I heard of, but that's it, right? Real financial vehicles that keep you outside of prison will make you pay your taxes on either the seed or the harvest, even real estate, right? So, when do I want to pay my taxes? Today on the seed or tomorrow on the harvest? So that's a key one. That's the first one, tax advantages. Number two, you want guarantees. So G, right? It grows on a guaranteed basis every single year. And the gains I made last year are protected and guaranteed for the rest of my life. Unlike Coca-Cola stock, which might be up today and down tomorrow, and I lost yesterday's gains, this is an ever-increasing financial asset that's never failed to provide guaranteed increases for over 160 years. That's pretty darn good. Mm-hmm. Number three, it is insurance. So we're immediately leaving our family more than we could ever save for them in the policy automatically, just because of the nature of what life insurance is. That's pretty darn cool. I mean, I'd be cool with that on its own merits as a certified financial planner. And then finally, number four, financing is something that we need for our entire lifetime. I don't care if you pay cash for everything, you still finance everything you buy, right? Either you pay interest to a bank, okay? So either we're going to pay interest to a bank through loans, lines of credit, credit cards, car loans, student loans, mortgages, either we pay interest to a bank or we pass up interest we could have earned on our money had we not spent it with cash, right? So even if we pay cash for things, we're still passing up interest every time we make a purchase, whether it's a cup of coffee or a car or a real estate deal. If I'm merely paying cash, I'm only falling back down the same rabbit hole that the debtor is trying to climb up to, which is net zero. And we keep breaking interest, our compound interest in our savings accounts and our money market accounts and our stock accounts every time we spend something, because that's money we'll never see grow for us ever again. So TGIF, what do you think? Whitney, corny enough, or is that stick a little
No,
bit?
that's really good. I was thinking about what you were talking about financing. And I guess, you're either using a bank or you are the bank.
There you go, man. Yeah. That's a really good way to put it. We're already in the banking business, right? We're just sitting on the wrong side of the banker's desk. So move to the right side of the desk, sit in the banker's seat, become your own source of financing, control the financing operations that your life already asks of you, for your kids' college, for your cars, for your syndication deals, for your business, for your own retirement. I mean, heck, at least do this with your cars and vacations. That's hundreds of thousands of bucks over your lifetime if you just did it for your cars and vacations. Not to mention everything else we have. You brought up college. That's not getting any cheaper, that's for sure.
Yeah, and what you mean by that is taking loans out of this insurance plan to buy that car or that house or whatever.
Mm-hmm. Yeah, doing this smartly, right? So paying your loan back over a reasonable period of time is better than paying cash, because as we mentioned earlier, Whitney, when you access this money, when you borrow against the cash value, it continues to grow as if you hadn't touched it. The most important rule in the financial universe is to not break compound growth. And this is the one place that I've found that does that on a guaranteed basis over your lifetime.
Incredible. How do we do that with the cup of coffee?
Yeah, good question, man. Yeah, I'd say start with the big stuff, then figure out ways to do it at smaller and smaller rates. I still pay for my cup of coffee with cash, not going to lie about that. And I still have a regular checking account, and I still do that for all my bills. But for anything that's a big expense, marketing, real estate purchases, for my daughter's college coming up in, a decade and a half, I'm already planning for it, right? That's going to be something. It's not like she just accidentally became 18 years old, right? So let's start building for that right now. Yeah.
Okay. So to simplify a little bit, if you have $100,000 to invest, you're going to put it in this insurance account, and so that way you can take out the 75 grand to go invest. And that's how that's a simple way of how you're going to funnel that money.
You bet. Yeah. I can do it in maybe 4 quick steps. Step 1, after you've set up one of these policies, step 1, borrow from your policy, pay cash at closing for deals, right? Number 2, you'll increase your yield without any additional market risk, because the policy is still growing. Even after you've paid cash for the deal, your policy is still growing at the same time. Step 3, repay the loan over a reasonable period of time. Step 4, do it again and again as often as you find good deals.
I like that. Okay, just a few more questions, Mark, before we run out of time.
Yeah, sure.
And tell me, I know you're a real estate investor as well. How do you prepare for this potential downturn that everyone's talking about?
Well, again, I think having a permanent line of credit ready for the next recession is the best way to go, right? What's that Mark Twain quote? He says, a banker is a fellow who lends you his umbrella when the sun is shining, but wants it back as soon as it starts to rain. Yeah, you ever heard that one before?
I haven't, but that's clever.
Yeah, good old Mark Twain. Yeah, so a permanent line of credit. I'll tell you a quick story. I had a gentleman who had $1 million line of credit with his bank. And in the midst of the Great Recession, he was using that line of credit for his business, needed it to survive. But the Great Recession hits and the bank exits his business over a period of just a few short weeks, and they term out his loan, meaning they force him to pay back that loan in 5 years during the worst recession we've seen in our lifetimes. So what did he do? He opened up a bank on yourself type whole life policy, started funding that policy over 5 years so that by the time the bank's line of credit was paid out, he had his $1 million line of credit in his life insurance policy to do everything he needed his business to keep doing to survive. And not only survive, but think of it this way, Whitney, when you have a permanent line of credit and all the other banks have taken away their umbrellas, right? All of your competitors are gasping for air, so to speak. will that make you less or more competitive when the next recession hits?
Oh, man. You're going to be ready to go. So there's nobody there though that's going to say, "Oh, wait a minute, Mark. We've seen this in your credit lately, or we've seen this over here. Whatever it may be. This is what's happening in the market, or it's going to be 20,000 this time instead of 75,000." There's not going to be anybody there like that.
Yeah, great point. So there is no financial underwriting when you request your loan. There's no credit check. There's no forced repayment schedule. You are your own collateral for this loan because it's life insurance, right? The insurance company already knows they're getting paid back. So whatever your cash value is, you can usually borrow about 90% of that number at any time for any reason. They don't ask any questions. In fact, you go click online, click here, click there, and the money is directly deposited in your bank account in about 4 or 5 business days.
Nice. So Mark, what's the way you've recently improved your business that we can apply to ours?
Again, not to beat too heavy on the same drum here, but, again, I have, more than half a dozen of these policies set up for myself, for my business, for my family. And, we've used it a number of times to, invest in real estate, invest in our business, invest in ourselves. And, I think having a regular rhythm of work and rest is a great strategy. So use the policies to go on vacations if you want. And, talk about a no-guilt vacation when you're still getting growth and dividends, even when you're on a beach somewhere, on the money you use to go on that vacation. So fantastic stuff there. I'd say that's been it. And honestly, something outside of the policies, I've figured out that I love cooking at the end of the day. It's a nice, relaxing thing for me to do. And so Audible, great tool while you're cooking to read up on books, get through books whenever you're just sitting there cutting vegetables.
Awesome. What's a way you are finding investors right now?
As far as me, I don't run a syndication deal, but we are looking for clients. We are looking for folks to work with. And my favorite way to do it is just to have one-on-one conversations with folks, just like yourself, on podcasts. We're living in the future, Whitney. I mean, I know you know that. You do such a great job on your show. But the very fact that we're having this conversation just feels like the greatest gift from the marketing gods to all of us, right? We all get to just have this incredible tool where we're having one-on-one discussions with people who are meaningful, changing the world, changing the game like yourself and with your audience. So yeah, keep up the great work.
Thank you. And so what's the number one thing that's contributed to your success?
Well, again, I think the coolest thing that I can recommend, I think I mentioned this last time, it's no different, have a spouse who is fully backing what you're doing. That if you have someone who's constantly saying, "When are you going to be home?" or, "Why are you doing this again?" It really just zaps your energy. But my wife has been nothing but like the wind in my sails to keep telling me that this thing is worth pursuing, worth doing. And, it's just so cool. To be a part of the team of you and your spouse. So get that straight, get that figured out first, and you're really unstoppable at that point.
That's awesome. I could not agree more. And Mark, tell us how you like to give back.
I think the very best thing you can do is do things when no one's looking and do things that don't have your name attached to them. So, I don't know if any of your listeners can appreciate that, but when you know that you've done something that no one else will ever find out about, that's one of the coolest things you can do. So giving without your name attached to it is probably one of the best strategies, at least in terms of personal confidence. Call it your good deed for the day, and something that you don't get paid for, don't get recognized for, but something that is going to change someone's life, even if they're not your ideal client. Maybe you give them some advice, even if they're not going to change your world financially. Contributing to their success, it just means all the world to you, and it builds your confidence at the same time.
Wow. Well, Mark, thank you again for your time. Another amazing interview and show and time with you. Appreciate you just so willingly sharing your expertise with our listeners and myself. So I've learned a lot from you. And so tell the listeners how they can get in touch with you, though, and learn more about you.
Yeah, please. Love to speak with you guys directly, either me or one of my colleagues. We have a number of colleagues around the country who are Bank on Yourself authorized advisors. Don't do this with your insurance guy down the street. I can't say that any more clearly. This strategy can be messed up if it's not engineered from the beginning properly. Once it's set up It's kind of like a smartphone. Once they build the thing, it kind of works. It just works for you. But you have to engineer it well from the get-go. So work with one of the trusted bank on yourself authorized advisors that I'm connected with. You can go to growmorewealth.com and meet us there. Scheduling a free meeting, growmorewealth.com is the best way to get in touch. And you know our podcast already. If you want to hear more about us and just kind of date me first, I guess, Not Your Average Financial Podcast.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.